Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on PCLN NVDA TSLA NFLX CMG. So PCLN, a lot of range in the candlestick today, rejecting from the middle Bollinger Band resistance, which is going to be the key test this week as it continues to drop down. And if the bulls can't get over it, it's going to drive the price down. So support down at 1746, and then I'm looking down at 1727 after that. The exponential supports are still holding the last 3 days, and as long as that is the case, you can see we have a bit of a tightening channel in between middle Bollinger Band resistance and exponential moving average supports. It's going to get tighter and tighter over the next 2 days. So watching very close, I was expecting more of a pullback at this point, but again, the market at all-time highs day after day is keeping the bulls very strong. So at this point, the bulls still have control unless we see a more significant weak close down near the low. Looking at this weekly chart, I would absolutely expect to reject from this exponential resistance. We're in a clear lower high, lower low pattern following a dump. A short-term bounce rejecting from these levels and pulling back down to the 1700s is again what I've expected and what I've been talking about in these videos. We're not seeing the signs of it at this point. I'm going to do CMG next because it is the same pattern and it did get the follow through exactly what we were looking for. The setup was the same. We were looking for the oversold bounce, fill some of the gap, bulls to tire themselves out, and then the bears to take back over. CMG has been going perfect. We were looking for a pullback in the mid to low 270s. We're looking for a higher low compared to 263 and just a tightening range to form here in between 270 and 280. So CMG has been perfect, rejecting from exponential resistance and heading back down towards support. PCLN, not so much. We need to see a move down to the low 1700s in order for the bears to take over for a short period of time. Again, market strength is the biggest reason we're not seeing that, in my opinion. NVDA pulling back pretty significantly today, a red Marubozu candlestick with the bears in control of the entirety of the day. It's also a bearish engulfing candlestick. Support is 213.61 and then the daily middle Bollinger Band, which is going to be in the low 211s. Bulls topped out just under the all-time high, 217.36. That all-time high was 218.52, just over $1 from that level. And we have to hold this middle Bollinger Band because if we don't set an all-time high and we start to take out the daily higher lows, that's a cause for concern in the short term for the bulls. We saw a significant pullback in MU today. The bulls did buy that dip and recover, but we have to be cautious on the semiconductor sector, definitely correlated to the cryptocurrency space. The cryptocurrencies have had a huge week, and we are likely to see some healthy consolidation there in the near term, which would likely lead to some consolidation here as well. Healthy on the weekly time frame for NVDA. Loss of the exponential moving averages for the first time in 3 or 4 months would be a red flag, but at this point, that has not happened yet. Tesla bulls closing strong up near the high of the day, close to a key bull break here. We've got resistance up at 318.23, and then we're looking at 326.67. So we have a clear little higher low pattern. Most recent higher low, 309.51. So the range right now, break 318.23 tomorrow, and there's a lot of space before 326.67 for the bulls to see some potential upside. This weekly chart keeps getting tighter and tighter between the 50-week support, which is held for 5 weeks, and the exponential resistance. And we're going to see a close above or below one or the other this week, in my opinion. Right now, it's favoring the bulls. Need to see follow through tomorrow to follow through with that and see a break of this weekly inside bar for the bulls as well. Netflix is extremely tight. This middle Bollinger Band has been rejecting the price for 2 weeks. The 50-week support has held multiple times, and we are converging and seeing tightening levels. So as of this point, bulls have to see a clear break of 197.70 for me to like bulls in Netflix. And for the bears, we have to lose the 50-day moving average support. That support is in the mid-192s, and that resistance is 197.70. Anything in between, I don't really like it for clear conviction in one direction or the other, so I patiently wait until there is momentum to ensure that I am profitable on an entry as soon as I make it. So watching that resistance drop down day by day, and we have to close above the middle Bollinger Band, step number 1, and break 197.70, step number 2 for me to like the bulls. Still healthy weekly consolidation, which is why I'm watching for that potential bull break. We also have a weekly inside bar here, and 197.52 would break that inside bar bullish. So lots of things to be watching on tightening ranges for Netflix and Tesla, and we should see some clarity this week with direction. I appreciate you watching. We'll see you tomorrow.